Welcome to a beautiful December 4th. I hope you guys are all having a wonderful day and ready for a great day in the market. Mark, how are you this morning, sir?
Uh, I'm good. I'm good. I was a little
Glad to hear
feeling
it.
pretty ill yesterday, but feeling better today. It's weird, man. I went out to play golf with my brother. We played 9 holes, and I felt fine. And then the seventh hole, I started feeling a little queasy, and played 8 and 9, got home and was like throwing up. It's amazing how
Oh,
fast
damn.
a friggin' flu bug can hit you, you know. And then they
Hey,
go
so
away
what are you
really
playing
quick
in the
too.
snow? What are you playing in the snow?
No, it wasn't snowing. It
Oh,
was raining though. It was pretty nasty.
oh,
But I
yeah.
hit the ball well, so I don't really care. That's all that
Nice.
matters.
That's what counts. As long as you hit the ball good, man. And you know what? Adverse conditions sometimes take your mind off of your swing and you play better golf.
Yeah, we couldn't really putt because they had the they put the sand on the greens for whatever reason before they cover them up. I mean, I don't know if
Yeah,
they do that
well,
down
it's
in
called
Florida.
top dress. It's called top dressing. I actually used to work on a golf course as well. What they do is they aerate the greens, they pull the plugs out, and then they top dress it with grass. I mean, with fertilizer and fresh sand to fill in those holes so that the green stays fresh and clean.
Yeah, yeah. So anyway, man, I'm seeing some trouble on the horizon here, and you know, seems like this war is really about to. Well, I mean, I don't know. It seems like this for a while, but now they're like attacking American bases, and what was their what
I
was
think
this?
we're at like 75 attacks so far, and we've only hit. I think yesterday was the first time they hit some rebels. They had hit four of them, killed four people. I think four Iranian-backed Iraqi rebels.
Yeah, what was the story I posted on that was on last night? I think I posted on my blog. So let me just see here. I don't see anything on it this morning though, but it seemed pretty ominous at the time. Let's see here. Escalation at sea. Okay, so a U.S. warship and multiple commercial vessels were attacked on the Red Sea on Sunday. The USS Carney has shot down missiles and drones. So a lot of times wars start by accident, man. They shoot
Well,
down the
you
wrong
know,
plane, or so.
I actually watched the report from I guess the Yemeni defense forces were talking about how they didn't care who was supporting Israel, that they were going to fire on everybody's ship, that they had launched a missile against a Israeli ship and a drone attack against another Israeli ship, and they were firing on anybody that was assisting the Israelis. So, you know,
Yeah. Well, they're crazy, man.
I mean, it's just
It's
that
like
simple. It's they don't care.
to them, it's a holy
They want the
war.
Jewish
They don't
people
think
moved
about.
off. It is.
Well, they want to kill us too, man. Anyone who's eventually not a radical Islamic, you know, terrorist, they want to get rid of. But anyway, on that note, um, this ISM report came out on, well, whatever, one day last week, Friday, I guess. And this report comes out once a month, and it's something that we look at, and it's free, and a lot of good information in here. And they interview people that are in the industry. Like these are comments of CEOs of the different industries that they follow. And we're starting to see some kind of bearish stuff here. Like economy appears to be slowing dramatically. This is from someone in the computer and electronics products area or industry, starting to feel softening of the economy. The 2024 forecast looks challenging. Our executives have requested that we bring down inventory levels considerably as it is starting causing customer shortages. I got to think about that one. Um, Elevated financing costs.
Mark,
And
who's that big grocer in New York City that they always have on Fox News?
you mean John Catsimatidis?
Yes, he was
Yeah, I'm
on
not sure the name
yesterday.
of his stores, but
He was saying that he's put 5% towards the loss of prevention and actually hiring armed security guards to be in the store to stop the shoplifting. So he's got a $250 million business. So 5% of that now goes to just security and keeping the stuff on the shelf.
yeah, yeah. I mean, and it's not just like low end areas like where he is. I mean, up here where I live in, I mean, Fairfield County is one of the most affluent counties in the country, and in the CVS here, in not downtown, but in like the north part of the town, it's like everything is locked up, and the Walgreens too. So, it's two things, right? If they don't enforce the law, and you got the audacity, how hard is it to walk into a store, pick something up, and walk out?
Absolutely. Absolutely. Well, you watch it all day. I mean, you getting the smash and grabs in Connecticut like they are in New York?
Yeah. Not well. I don't know. Not as much, but I think around here, it's not as if you get arrested here, I don't know if they do. I haven't heard about it. Put it that way.
Gotcha.
But my little brother, who is a cop, says that, he said there's this one kid that steals cars, and he told me, I forget the exact numbers, but I think they've arrested him 16 times in the last 6 months, and he's 15 years old. And in Connecticut, they shut down like what we used to would have called like reform school or like the juvenile, whatever. So there's no place to go. So they arrest the kid, and he gets out the next day. And a week later, he steals another car. So think about that: these little 16 cars in 6 months, and he's only 15 years old.
So what's going to make the difference in another year and a half? He's going to have 75 cars under his belt by the time he finally gets to go to prison. I mean, all he's doing.
I guess it doesn't get serious until you get to 18.
That's so stupid. He's auditioning for jail. They might as well just go ahead and put him there.
All right. So anyway, like I said, I see some troubling things. So we just saw some of the, potential negative commentary there of the economy slowing down. The other thing I want to not forget about, I know about this over the past few days, but I think it's pretty important, is this AAII sentiment forecast, or what, I don't know if forecast is the right term for it, but I guess they're data. So we got an extreme amount of bullishness now, up to like 48.8%. I would say that's extreme. We've only gotten over 50 like a few times in the last year. And this on the other side, bearish, is extremely low. I mean, this is the lowest it's been at least since the last year, and probably for a considerable time longer. So what happens is when you get excessive bullishness, what happens? People spend their money, they invest their funds. And then after that, there's no one left to buy anymore. So then the market can only go down. I think a really good example of that action was seen in NVIDIA, right? Oh, look at this. This is starting to break down here. This is well, you know what? I mean, this looks like an easy kind of short play, but the problem is the options are going to be so expensive. But I mean, this to me looks like it's got a ways to go lower. But anyway, going back to our sentiment talk. So they reported these blowout numbers, and then the stock went lower. So what does that mean? Well, it means that everyone who wanted to buy NVIDIA has bought NVIDIA. They're full. The cupboards are full, I guess, is like, so the market runs out of buyers. Forget earnings and, price to sales ratios and this, that, and the other thing. In the short run, most of the time, the vast majority of the time, 90% of the time, markets move just because of these short-term technicals, right? These short-term supply and demand changes. The only thing that can change the price of a stock or any market is if there's a change in the supply and demand equation, if things are out of equilibrium. So this shows us that we get these great numbers, but it doesn't go any higher. Well, the markets run out of demand, and now there's a lot of supply, and the supply pushes the price lower. So I think that because the stock is so popular, that's a really a pretty interesting signal there. And then, unfortunately, they don't give the year's last lows, but they give the year's last highs for the readings, and the high was 51% last July, and the highest bearish percentage was last December. And if we take a look at where that happened in the market, all right, so look at where those two readings, those two like extreme readings were. So the most bullish was here. And now this is where we're getting up to the same amount of bullishness because this was, I think, 51.1 and now we're at like 48.8. And then the most bearish was down here. And this was a good time to buy. So this just shows you when the people get really bearish, they sell. And eventually the market runs out of sellers. And then the only place it can go is up. And if people get really bullish, they buy. And then eventually the market runs out of buyers. And then the only place it can go is lower.
You had a question from Sean here, Mark, about Uber being added to the S&P. Will it be good for them?
Well, that's going to create demand for the stock because there are a lot of funds that are investment strategies or investment firms, I guess, that are mirrored to the S&P 500, right? So a lot of times these money managers, certain type of investment management is like the easiest investment management. Like we used to say is the easiest job on Wall Street, if you can get it. Because when you're managing money, you're graded against the benchmark. Say it's the S&P 500. Well, you basically make a quasi-index fund, which means you make all your positions the same, pretty much as the S&P, so you're highly correlated to it. And then if you do a lot of business, you get a couple IPOs over the course of the year that you can just sell, and bang, there's your alpha. But anyways, because of that, this is going to create more demand. So that's why the stock is up. And also, too, maybe a little bit longer term, some fund, but I don't think it would count with Uber because Uber, I assume, was on NASDAQ, which is a legitimate exchange, too. But some investment funds or firms they have parameters or rules. Like in order to invest in a stock, it has to trade on a major exchange. Or we saw last week with the Wolf, right? How some of these large holders, I think the biggest one we saw was the some pension plan in Canada, the Canadian pension plan. All right, they own, this average volume here is 5.66 million shares. They own like 58 million shares. It's like, how are you going to get out of that? I mean, so anyway, I don't know. Going back to the original point, is a lot of investment grading or evaluation is done around these things. So if your portfolio should mirror the S&P 500 and Uber just went into it, well, there's this demand for funds that now are going to be buying Uber so they can get in line with the index.
Well, that comes back to the point of these people that have no sophistication with finance being in charge of these actual pension funds that allow somebody to vest the Canadian pension into Wolf.
Yeah, my experience,
that's pitiful.
I don't, as someone who understands trading and who understands finance, liquidity is a big issue. Just because something is trading at $10 doesn't mean you can sell it at $10.
Right.
If 100,000 shares is traded and you have 1 million shares to sell, well, if there's no buyers around, a buyer might say, hey, I'll bid you 9. I'll buy them, but you got to sell them to me at 9. $10 doesn't work. And if the market's like in a trending lower, that's what you got to do. So, yeah, I mean, maybe there's something else we don't know, but I just think it's egregious that something like that would happen, because we used to call it the Roach Motel. You get in, but you can't get out.
Right. Well, you would just think that even if they have 58 million shares and it's only trading 5, they're going to move the stock if they try to do anything.
Like if the word gets out, and it probably would, that they were selling, every buyer in the world is going to just step away.
Yeah.
Because they know that eventually the price is going to go lower. So
see, there could be some fixing of the financial system by making these pension funds invest in good quality companies instead of or solid companies that track with the S&P instead of whoever they want to invest it with. I mean, that's there should be some way to stop these unsophisticated financial people from having that much detriment on the people that are in the pension. You know what I'm saying?
Yeah, I hear you, but a lot of pension managers are, that, at least in my experience, are not former financial people.
Sure.
There are people like, and I'll give you a perfect example. We had a client that was a firefighter's pension down in Georgia. And who was the head of the pension? A guy that was a firefighter. He
Most
was
popular dude.
retired, but he was voted in. So he knew enough about as much about finance as I know about fighting fires, right? I mean, so, but that's just how it is. A lot of places it's political. I mean, some of the places have legitimate investment teams, but some of them, they're just really not that sophisticated because the people running them are more like local, like you, for instance, here in Connecticut, the treasurer runs the pension plan, and she's got no background in finance. She's a career politician.
Yeah.
But anyway, so let's get into the markets here because there's some. So going back to you people who are a few minutes late, all right, we got this really bullish sentiment, which is actually negative for the market because it could tell us the market's running out of buyers. We had this report come out in the ISM on Friday that a lot of the tone now is getting negative on the economy. And as we go through the markets here, we're going to see that we're very overbought. I mean, the last time the S&P was as overbought as it was now was right before this sell-off, right here. And a lot of this is going to come down to what goes on with the interest rates. So let's see what bonds are doing this morning. So this means interest rates are going to be up a tiny bit because bonds are down. So I think if this 10-year yield, well, I mean, there's a lot of different indices or years you could watch. There's the 2-year, the 5-year, but it seems like the 10-year is the most popular. Now, this is getting really oversold too, which we have to remember. This is the reverse or the inverse of the bond. So I guess I'll just, well, first I'm going to do is put this Bollinger Band in here. This is a pretty cool way to measure momentum. I think it's pretty effective because it's based on statistics, and a lot of the algorithmic funds that are out there trading these days, or algorithms for trading, are based on statistics. But you see how it's below this red line now? Well, that tells us that it's more than 2 standard deviations away from the mean, the 20-day moving average. This red line is 2 standard deviations below the 20-day moving average. So if we get below it, it tells us, okay, it's over, in this case, oversold. What you'd really be looking at is this, which is the bond. But we don't need to confuse ourselves. But this is what's trading, and you can see it's really overbought. So there's a chance that we can get kind of a reversal, a pretty meaningful reversal here. And that could be a trigger to the broader market sell-off. Let's go look over at our financial sector. This is also very overbought. Although, I mean, it could be potentially breaking out here. Of course, it's going to take us a couple days, but to know. But if those rates start to come higher, this could reverse and end up being a false breakout. And false breakouts in and of themselves are good trading signals. They tend to precede fairly meaningful moves lower. Then we can jump over. Well, let's go back to our tech sector because that's the biggest. So we'll start there. There's 11 sectors, and different ones kind of run the market at different times. So a big part of trading is not just the trading; it's knowing what to watch and when to watch it. Like, for example, interest rates no one cared about for a decade. Now, like, interest rates are the main thing driving the market, at least in the short term. So tech is consolidating. The second biggest sector in the market is healthcare. And we can see this guy is potentially breaking out, but this isn't as big of a move as it seems. All right. This line is, we have to keep it in perspective. This line is 131.25 and it's trading at 131.60. So for all intents and purposes, we're still there. Then we look at the financials, industrials. These guys are extremely overbought. As a matter of fact, I would probably be looking for some names on the short side in the industrial sector because you go to a name like NVIDIA and it's so popular that the premiums are so high. It's hard to make money. But if you go into the industrial sector here, like, who's talking about trading Dow Chemical calls this morning? It's like no one, So this would be a good place to look. Yeah, as a matter of fact, we can actually just do that real quick. We can go take a look at what are the biggest stocks in the in the sector. Actually, we can see what all the stocks are, but it's easy to see the top 10. So Union Pacific is the biggest. So think about this. We have a sector that's overbought and it's at resistance. So there's a good chance it reverses. Now the question is what within the sector will reverse by the most? And we can look for charts that look really kind of, I guess, vulnerable, right? And right here, Union Pacific. I mean, I think this looks to me like, I mean, this could reverse from where it is now right back down to here. If there is a reversal in industrials, because we have our fast move up, fast move down. And yet I would almost guarantee you that you're going to get cheaper options in Union Pacific than you're going to in Tesla or, NVIDIA or whatever the stock du jour is. Although those are more like stocks of the year than of the day. There's General Electric. Now this one looks like it could reverse, but it wouldn't reverse by as much. So I would think Union Pacific, just based on the short term, like look at the technicals here, right? There's probably going to be some support around 120, 120 and a half. So this could potentially reverse by like $1.70, right? And whereas if we look at Union Pacific, I mean, obviously the stock is twice the price, but this looks like it could be reversing by about 10 relatively quickly. So I would think that would make this a more attractive target. And we got Boeing. All right, so Boeing is getting, look how overbought Boeing is. It's like really overbought. All right, let's check this out here. I might see something interesting. All right, going back. All right, so Boeing is the most overbought it's been since December of 2017. So when was that? December of 2017. So that was like right here. And then it went sideways for a while. And then the overboughtness got pushed out of it. And it started to move higher. But anyway, just something to pay attention to. I mean, this is like really like double secret probation overbought. All right, so let's just, yeah, so this looks like a pretty interesting potential candidate as well here. And Honeywell is next. Now, here's another stock, right? Overbought at resistance. Notice how what was support turned into resistance. And that's because you got your remorseful buyers trying to get out. And then you had some resistance here. And you got people who bought there now are trying to get out. The price is higher. But overbought and at resistance, this could potentially reverse. This, I think, is just a good way to look for technical trading ideas. If you see a sector that's going to do something, you look within the sector, because by definition, if we're looking at a sector ETF like XLI, we're looking at a basket of all the stocks that are in the sector. So if the sector is going to make a move one way or the other, it just stands to reason that some of those stocks are going to move by more and some of those stocks are going to move by less. So what we can do is go through the sector and just take a quick look at some of the charts and see if there's stuff that looks really vulnerable, because there will. It's just a matter of how much into it you want to look, because there's probably 70 or 80 stocks, but regardless, it's a good way to find ideas. Now, something like this here on this Lockheed Martin, I mean, this looks like pretty clear to support to me, around 443. I mean, so it's trading around 449. I'd keep an eye on this, because if this breaks this support down here, then we can probably get a decent move lower to down here, because we didn't really have we had a bunch of rapid moves in here. There's probably not going to be too much vested interest in there. And then if that support breaks, we'll be trading right above this gap. And one of the main reasons why we get support, is because we got remorseful sellers trying to buy shares back. They sell, the price goes higher, and they tell themselves, oh, this sucks. If it comes back to my price, though, I'm going to buy my shares back. So if you have a big gap like this, where you close at whatever price down here, 395, and you open the next day up here around 428, well, no one sold in here because it never traded in there. So if we break the support and we get back into this price levels, there's a good chance we make a rapid move lower back through them. One of the principles about markets is if a stock makes, or a market makes, a rapid move through certain price levels, or if the gaps is the perfect example because it goes so fast, there are levels it doesn't even trade at. And then eventually it reverses and comes back to those price levels going the other way, there's a really good chance that it's going to move through those price levels really quickly. Again, because there just wasn't a lot of vested interest on the way up. And it works the same on the way down, too. Things that make rapid moves higher tend to make rapid moves lower when they get back to those prices. And things that make rapid moves lower tend to make rapid moves higher back through those price levels. So if you've ever heard the term that gaps refill, that's where it comes from. So there is some wisdom in some of these Wall Street sayings or adages, like Wall Street wives' tales. But if you understand the psychology of how these levels form, it makes complete sense. Now here we got UPS, which I think is pretty interesting because look at this important 156 level. So September of 20 was support, October of 20, January of 21, October of 22. Then it became resistance in October of 23. So that's a really good example of market memory. Here's a level that has been important literally for years. We broke through it down on the downside. Now we're back up to it. Not really overbought yet, but sometimes when things get to resistance, they sell off because some of the sellers, excuse me, some of the traders who created the resistance, they start to get nervous that they're not going to be able to sell. They start to sense that there's other sellers around. So they start to reduce the prices they're willing to sell at. And then they undercut each other, and it starts kind of a snowball effect. So that's why we sell off of resistance. And this opposite is true coming off of support. We rally off of support because anxious buyers start to notice there are other buyers coming into the market, and they think, gee, I better raise the price I'm willing to pay, or else someone else will, and the sellers will go to them. So you got to kind of just throw all this news-related trading stuff out of the window, right? I mean, we can look at examples of, like if we look at the Dow Jones, right? And if we go back to the COVID crash, now let's remember how bad COVID was. Like people literally thought, no one really knew what was going to happen. So this is where we get this big sell-off. All right. Now let's go back to 2015 and 2016. So this level here around 18.3 for the Dow Jones was important from December of 14 to October of 16. So almost 2 years it was resistance. When we get this COVID crash, where do we find support? Pretty much at the exact same price level that was major resistance. So if you didn't know about COVID and you were just following the markets and you said, all right, well, something's going on, the market's crashing, but after every market crash there's ever been, there's been a recovery. So there's got to be some place to buy here. Oh, look at that. A couple of years ago, that level was resistance. There's a good chance there's going to be support there. And I mean, it's almost inexplicable how it could just stop within pennies. I mean, or how precise these could be, how this basket of 30 stocks could come together. And, all these different things could come to manifestation, or there's so many different things going on, but they manifest themselves in these like perfectly clear levels. And then we can see here, right? Here's the last resistance before the COVID crashing. That becomes support in October of 22. All right, so last up is ADP. You got to let the market tell you what to do. You can't have these like preconceived notions if you're doing this style of trading. All right, and this doesn't really seem to be too much going on here. All right, I can look at Hershey. This has been a really good long-term stock. I mean, if you look at it historically, it's like, I mean, it's hard to tell where like the crashes were. I mean, this thing has just kind of steadily moved higher since 1976. But in the short term here, let's take a look. I took my daughters to Hershey, Pennsylvania one time. I don't really like it.
We've been to. It's okay.
Yeah. Well, we can see we got support there. But we have broke, but it is looking like it's going to start to trend higher here, because check this out. Pretty clear trends, and now we broke the downtrend line. So remember, these uptrend lines, downtrend lines, they're not like support and resistance levels. They're just kind of a graphical illustration of like, hey, the leadership in the market could be changing here. So it's like here, right? So we're pushing the ball down the field. The red team's winning here. Like the Chiefs beat up on the Eagles yesterday. That was a pretty boring game. But
yeah,
the red team is pushing the ball lower, or pushing the ball down the field. Now look at this action. The reason why this looks like it's the trend is changing is because we're back above all this important short-term support and resistance, and it just looks like the blue team has made a goal line stand and they're about to take over. And well, this move looks like they have taken over. The momentum has reversed. So the red team was in charge, and now it looks like the blue team is taken back over. Markets are always trending. They're always going up, down, or sideways. And obviously every trader's dream is to be able to identify when a trend is changing from one way to the other. Now, I know that hindsight is 2020, but you can get a couple little ideas here, right? Here, the blue team is in charge. And if you look at this particular day, remember the red rectangles, the top of the rectangle is the opening price and the bottom is the closing price. So if you were to look on this particular day, Wednesday the 15th, in the morning, you would have said, oh, it's going to be another up day. We're opening at a higher price than yesterday's close. But look what happened. By the end of the day, the red team pushes all the way back through the opening price. And we didn't really get back down below the opening price here. Oh, sorry. The red pushed through was the closing price here. So there should have been some support there, but we blew right through it. So this just shows the blue team is in charge. And then this one sign here could have been a clue. All right, well, that's a really strong move by the red team. That's like a big defensive play. I'll use my football analogy again. And so the tide turns, and now we get down to a level that had been support around 185. And now it looks like the trend is changing. And you don't really see much in here where it spent a lot of time trading. Maybe around, yeah, I mean, nothing really sticks out in here to me as though there's a lot of trading at it. But notice where this top is back here is right at 200, 199.91, because guess what? People like to sell at nice round levels. So assuming I would think that if the market doesn't start to fall apart, if interest rates keep going lower, and if some of the overboughtness comes out of the market, like if we consolidate for a few days, then I could easily see this thing trending back up to around there. I mean, my target would probably be around like 195. And then you would just think, all right, well, resistance at the former top. There's people that bought back around 200 that are like, oh, I bought it at 200 and the next day it was 180, 195 and got down to 185, but now it's on its way back up. If it gets up to my price, I'm going to sell so I can get out of here at break even. So that's the way I would look at that stock. I mean, I don't know what your time frame is, but these things could overpower it, right? Like any kind of decent sized move up in interest rates, because the market is so overbought. I really think that could lead to a pretty meaningful sell-off. I mean, I'm not talking about like a crash or anything like that, but and this is going to be important to watch here too, is Apple. Look how Apple's been trading right above this clear. This is really clearly defined support around. Well, let's get really kind of precise here because it's down this morning, and that's a pretty decent move lower, 71 basis points. So I would say, we don't want to be too precise, because we've seen a lot of people miss out on great trades because they got too cute. But this line here is 189.75, and we're basically trading right on it. So this has been well-defined support for Apple since Thursday the 16th. And, you don't need to be a chart guru to see that it's been well clearly defined. Now, what is support? Well, it's a bunch of traders and investors who want to buy. And if we trade below that, it tells us something. It tells us that those traders and investors who created the support with their buy orders have left the market. So it tells us that demand is leaving the market. So if demand leaves the market, then the supply side, meaning the sellers, may have to force the prices lower if they want to attract buyers off of the sidelines. And that could force us into a downtrend. So interest rates are going to be important to watch. The action here in Apple is going to be very important to watch as well, I believe. I mean, Apple is the biggest stock, 7% of the S&P 500. Let's look here at Microsoft. Yeah, you see Microsoft has broken its uptrend.
Mm-hmm.
And this is an example of bad action, meaning that we had a big move down on Friday. And by the way, our car is going to cost $2,800 to fix.
Damn.
But yeah, bro. I hope we hear back from the dentist's office. So my wife, someone backed into my wife's car at the dentist's office, and it was a pretty sizable debt. So you can't tell me that they didn't know they did it. So we're going to try to get the security video, the security camera, and see if we can identify them.
Hell yeah.
Yeah, that's just an cool thing to do, man. But anyway, we can tell Microsoft has broken its uptrend. So let's just kind of sum this up here. Like Microsoft and Apple together are about 13% or 14% of the S&P 500. It looks like Microsoft has made the turn, at a big move lower on Friday, and there's really no rebound this morning. In fact, it's down 90 basis points, which is a pretty big move. So if Apple starts to go lower, then that'll be our two biggest stocks in the market are starting to trend lower. And then that would get the tech sector to break the bottom of that recent range that we saw. And then that would kind of spread out through to all the other tech stocks. See this, how it's in a range here. So the bottom here, I would say like 183.50 is what you really should watch. And it's about $1 above that. We saw NVIDIA looks like has a good chance it's starting to break down. So right there, I think I think those are the three biggest tech stocks. Let me just confirm that. Just going to go back to the sector ETF fact sheet. Oh wow, look at that! So Broadcom has surpassed Nvidia. But anyway, Apple is say 24%. I mean, Microsoft is 24%. So Microsoft has surpassed Apple. It's pretty interesting. Apple is about 23%. So these two stocks dominate this sector. Nvidia is 4.28%. And we can see, and as we've just seen, these three things all look kind of negative. Microsoft is heading lower. It looks like Nvidia is heading lower. And Apple is testing really clear support. Let's see what Broadcom is doing. Broadcom. AVGO. Broadcom. Yeah, I mean, look at this one. This guy looks like it's trending lower too. Well, there might be some little bit of support here. See how it's found a level, right? See how it got down to this level that was resistance, and that's where the sell-off has paused, at least for now. But if the whole market tech sector starts to go south, this could be a good idea to look here for some trades on the short side. I mean, your options are going to be cheaper than your Nvidia options. Let's see what is next. Adobe. It's like all these. It's just kind of mind blowing when you look at this, and you just see how, like, you know, dominating these two stocks are, how much bigger than they are than all these other companies. It's really just kind of mind blowing. Let's look at Adobe. Yeah, I mean, Adobe's broken its uptrend. So this one, remember, it looks like the blue team is in charge, and now it looks like the red team made the goal line stand, and the momentum turned, and now it looks like it's going the other way. Let's look at Google. Is also, you know, they got it on here as two different things. Oh, sorry, I'm in the wrong sector. Google is actually in the communication services sector, but they list the shares separately. All right. For whatever reason, I always just look at Google L. I mean, look at this. Look at this. I mean, this thing was in a free fall. So it's down 50 basis points, down 1.21 this morning. Another, you know, I mean, that's a big move, 1.1%.
Yeah.
And we can look at Facebook. And look at that. That's also down 1.2% in the pre-market. So that's another big move. And this thing, see, it broke its uptrend. Now it's trending lower, trading below this important level here. So that looks weak as well. Man, we're seeing a lot of weakness in the tech sector, it looks like. And in the pre-market, we're not down. So the S&P is only down about 40 basis points, but the tech sector is really getting crushed. So that there's got to be some strength somewhere else then. But like I said, I think we're kind of set up here for if we get some kind of catalyst that would make interest rates move higher, or some missile hits the wrong ship over in the Middle East.
Yeah.
You know, I'd be ready to, or it looks like interest rates are kind of steady this morning. But yeah, that's what I would be looking for. And it all comes down to, it's like, just keep an eye on Apple, keep an eye on this 10-year yield. And if Apple starts to take out that support and this yield starts to move higher, then that could probably be your catalyst for whatever you do. Buy puts on the stocks you like, or look at this. A peak for the NASDAQ and Dow could come as early as this week, says top strategist. All right. Let's see who this top strategist is. Oh, Tom DeMark. Hey, I like Tom DeMark. Tom DeMark, the award-winning technical strategist, thinks the Grinch may soon. Wow, I feel pretty good about myself, man. It's like,
How
gee,
about that, huh?
yeah, dude. It's because it's like the market looks weak to me, and this dude's way smarter than I am. I met him when I worked at
Because you
SAC.
undersell yourself, Putrino. I think you're a little bit more intelligent than you give yourself credit for.
Well, this dude is a pretty cool guy. But yeah, so he's got these different things he looks at. They can get pretty complicated. But as you can see, whenever you get to the 13s, and it's kind of complicated. It's like if you get like 4 days in a row that are higher than if you get 9 days in a row that are higher than the close 4 days before, that gets to a 9, and then that resets it into a new cycle where you go into, if you get 13 days in a row where I don't remember exactly what it is, but just hypothetically where the close is higher than the close 2 days before or whatever. So you can see here on the Dow, I mean, they got it right at the top there, and right at the bottom there, and right at the top there. Q's looking kind of weak. Bitcoin, it was right there. Although Bitcoin is up this morning. I think this is kind of trading up like a flight to safety. I guess because of the stuff over in the Middle East. I mean, well,
Holy smokes!
Yeah, it was up more before.
Yeah, but that's a 24-hour trading cycle.
When stuff gets this overbought, you got to just put it on your possible reversal target.
So you've got inverse, you got bull and bearish BitO and BitI for Bitcoin.
Those are ETFs.
Yeah, BITI and BITO.
How about that? Let's see. And they trade good volume. Oh, cool. I didn't even know that these things existed.
And then BitI, or BitO, excuse me, with an O, and that should be the bullish.
BITO. Yeah. All right. So that's cool. So if you think that Bitcoin is going to go down and you don't trade crypto, you can get exposure to it here. BITI
and BITO.
Right. So this is designed to move in the opposite direction of Bitcoin. So you see that's BITI. So if Bitcoin starts to move lower, then this should start to move higher. I mean, it's not an exact thing, but it's the reason why the charts, I mean, they look very similar inversely, but you got to remember Bitcoin trades 24 hours a day, whereas this only trades during market hours. So when you see a gap on here, it's not the same as like a usual gap. So it's just something to be aware of. But yeah, there you go. Way to get exposure to Bitcoin without actually having to buy it. I mean, I've never bought a crypto in my days.
I've got some Bitcoin, not a whole lot, a little bit, just like, I don't know, not much. It's up nicely now though, that's for sure.
Yeah. Here's our Coinbase Global. All right. So anyway, so Tom DeMark. I mean, all these things these 13s are just really a fancy way of, or a different way of measuring momentum. It's a momentum indicator. And we can see that on your standard momentum indicators, like the RSI, I mean, this is pretty overbought for the S&P. It's really just, it's not really like anything Nobel Prize winning or dramatic. It's just, think about this. A level that is a resistance level are price levels where there's a lot of people who are interested in selling. Overbought conditions mean that we're trading above what would be its usual or typical trading range. That's going to draw sellers into the market. So it's almost like you got kind of a double whammy going on here. We're at a level where there's a lot of sellers, and the overbought conditions are going to draw sellers into the market. Now, on the short side here, we can see that this 454 level has been pretty clear short-term support going back to the 22nd. All right, let's just see if there's any more headlines. What can you do if you come face to face with a grizzly bear? You probably get on your knees and start praying, man.
That's all you can do. Ball up in a ball and pray to God he doesn't eat you.
God, yeah. Pretty amazing how an animal that big can run so fast.
Or jump off a cliff.
Yeah. All right. I don't see anything that specifically sticks out as much as that story. 3 reasons it's safe to own the Magnificent Seven stocks. Now that's like when we talk about contrarian indicators, sometimes you can see contrarian indicators in headlines. And this very well could be one. You know, you see this, someone is saying, oh, it's safe to own stocks. Like the famous example of this is that most technical analysts talk about was that right before the market crash in 1987, Barron's had on its cover like a big picture of a bull. And I don't remember exactly, but it's like the bull's got room to run type of a thing. And so it's a contrarian thing. It's like, all right, well, guess what? Traders are caught up in the momentum. Well, so are financial analysts. And then they're going to hedge themselves by saying, well, it might be overbought, but in the long run, it's going to be great. I mean, sorry, they might be overvalued, but in the long run, it's going to be great. The rich valuations are entirely justified. Now, I always like to say when people say this time it's different, then it's time to pay attention. You know, the rich valuations are entirely justified. So basically what he's saying, or she, I'm not sure who this analyst is that, all right, well, this time is different. It doesn't matter what's happened in the last 250 years in the stock market. These guys are different. So we can value them in different ways than we can value other companies. And that's when, you know, this could be your classic article that comes out right at the top. Magnificent Seven should be able to sustain their fundamentals. You know, there's your artificial intelligence again, blah, blah, blah. AI this, AI that. AI productivity gains will boost Magnificent Seven stocks. Now, look, I'm not talking about, hey, where are these guys going to be in 2 or 3 years? But,
right,
you know, this could definitely be emblematic of a kind of a short-term top here. All right, everyone, I guess I'm going to get going. And yeah, I'll see you all tomorrow morning.
Thanks for giving us your time today, guys. Good luck in the market and have a wonderful day.